what's up everybody? Friday, TGIF. So, listen to this. Today the jobs report came out for December. Yesterday I sent out my forecast and I said the payroll number was going to be up 145,000, and guess what? It was up 145,000. I hit it right on the button. You can't get any better than that. So, but the important thing in that report, at least from what I can see, was hourly earnings. Now this is really important because I have been now telling you about certain indications of slowing in the economy. Now I spoke about the growth of loans and leases now growing at the slowest rate in 21 months. And when you look at a chart of that growth rate, it literally, like, since October, kind of just fell off a cliff. I talked to you about gasoline demand. Same thing, just fell off a cliff. I talked to you about distillate demand. This is fuel demand. This is very sensitive to the economy, okay? Distillate demand broke a 4-year uptrend. I talked to you about weekly claims for unemployment insurance. If you look at continuing claims, that is now at the highest level in 18 months. And if you look at the 4-week average of weekly claims, that is at the highest level, or just recently came off the highest level in 2 years. Now, add to this today's report, the 145K alone, that increase is not really strong, but more importantly, average hourly earnings grew at the slowest rate in 3 months. And listen to this, the growth rate year over year, if you look at the growth in earnings year over year, now at the slowest rate in 15 months. Now the interesting thing, now let me just backtrack a second, and you know that the core of my analysis is the fiscal. I will come right out and say that the fiscal is strong, very strong, at record levels. However, we do know that the fiscal at record levels, at least last year and also this year, has only been able to result in a 2% GDP growth rate. And we had, alongside the fiscal, a rapid acceleration in bank credit, at least when you go back, actually over the whole entire, most of last year, okay? So that helped too. I mean, bank credit is money, and firms, households, they access bank credit, allows them to spend and invest. Now that's all slowing down. So we still have the fiscal picture that is very strong, and I don't expect that to be cut back anytime soon, at least until the election or after the election. That's a political process. It doesn't just stop on its own. That spending is basically automatic. Once it is appropriated, once Congress and the president decide on what the budget is going to be, that spending just goes. And the big portion of that spending, as I've explained to you, are the non-discretionary items like Social Security, Medicare, Medicaid, and also to a certain extent defense, which is discretionary, but it's treated like a non-discretionary. So the fiscal is good. The fiscal is strong. But there's something going on in the economy right now. Again, maybe it's too soon to tell, but there are more elements of weakness coming into the picture as opposed to going out of the picture. So it makes me concerned, especially against a backdrop of the stock market just making new highs every single day. Now, yesterday on the video, remember, I talked about how the market can deviate for a period of time from the underlying fundamentals. We saw that happen at the end of 2018 when the market was crashing. We had that big correction, and I was telling you at the time, hey, things are getting better. All right, we saw the exact opposite of what we're seeing right now. You saw fuel demand going up, you saw bank credit accelerating higher, you saw all these metrics getting better, and everybody was panicking and selling the stock market because they were, freaked out about the so-called trade war or whatever it was at the time. China, right? China's going to fall off a cliff, their economy. That was all nonsense. Everything was getting better at the time. So the market deviated from the underlying conditions, and when that happens, it creates opportunity. Okay, so we were in there buying like crazy. Now, fast forward to today, where you have the market going up every single day, making new highs after new highs after new highs. Sentiment is so bullish. You had Goldman Sachs come out a week ago saying, hey, we're never going to have a recession again. Remember, all last year, everybody was saying, hey, there's going to be a recession, inverted yield curve, trade war, Fed doing repos. There's going to be, now, never going to see a recession again. So you have this mentality, which is super bullish right now. And the market is deviating once again from underlying conditions, which we're starting to see are deteriorating. So what does that mean? Sets up another opportunity. Now, it's impossible to really time these things. What you have to do is manage your funds correctly. That's another thing that I teach. That's another thing that I show people. But you got to be selling into this. You got to be selling into this. And this, when this corrects, I don't think it's going to be like the corrections we saw last year, which were basically just technical or driven by some crazy headline. Trump tweeted something, and then, underlying that, it was still a bullish environment. No, these are going to be market corrections based on conditions that are not so positive anymore. So that's what's going on. Anyway, 145,000. I hit the number right on the head. You can't do better than that, folks. You can't do better than that. It was exact. It was exact. All right, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You got to use MMT. Hey, look, I'll tell you. What's his name? Ray Dalio, right? Runs the biggest hedge fund in the world, Bridgewater. Had his first losing year in 2019. First losing year since 2000. So the first losing year in 19 years. Why? Go back, Google what that guy was talking about and what his fears were all through last year. He was worried about the deficit. He was worried about debts. The guy doesn't understand MMT. He might talk about MMT from time to time, but he doesn't understand it. He allowed these concepts about debt and deficits, the way the mainstream has this kind of flawed understanding of this, and you see how it affected his performance. His money flowed to us, at least partially, my group anyway. And that's what we do. We take money away from those who are misinformed or lack the understanding, lack the knowledge, lack the mental game. Flows to us. You want to be in that position. You want to be in that group. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Have a great weekend. Bye-bye.